Hello, ladies and gentlemen. Good morning to everyone in the house out there, and happy Friday to you. Is the last trading day of the week. If you can hear me and can see my screen clearly, kindly type in hi in the comment section so that I get a feedback that we are good to go this morning. I would like to see some comment, please. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section. So let's see what we have right here. Okay, I can see 491. Good morning to you. 8818. Good morning. 642. Good morning to you as well. Valerie, how are you doing this morning? Good morning. Okay, Zandi CEO. Okay, good morning. All right, you're welcome. Hey, Carrie, good morning to you. Thank you very, very much. All right, so I'll take this as a positive feedback as we are good to go this morning. So on this note, I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sharif Daramola, and for the next 1 hour, I will be your host as we dive into the financial market to review all the pairs that we have been monitoring since the beginning of the week. Look out for more trading opportunities, manage our trades, and get prepared for the New York session today. It's Friday, the last trading day of the week, and you all know what happens on Friday. So on Friday, we normally see it's more of a psychological thing actually, that on Friday, majority and even key players will want to be taking some profit off the market by closing some of their positions ahead of the weekend, as anything could actually happen during the course of the weekend. And in that regard, we shall be seeing that reflect on the chart in the form of price action moving in the opposite direction of the prior leading price action. So we are going to be taking all this into consideration while we position ourselves ahead of the New York session today. And for those who are joining us for the first time, I haven't forgotten you at all. I'm so glad to have you guys around with us for the first time. And what we simply do here is to come here together and review all the pairs that we have been monitoring since the beginning of the week. Look out for more trading opportunities. Dish out ideas on how to manage our existing and running trades as we plan for the New York session. It might look a little bit overwhelming at first. I very much understand that, since this is going to be your first time with us. I trust you. Trust me, with time, you will get to understand how this works and you will be able to use the information you have gathered here to make your own individual decision. So once again, you are welcome. Stay tuned in so that you don't miss out on any of the ideas we are going to be talking about today. So with that being said here, let's dive right into the charts and let's see what is really going on in the market right now. But before we go into the chart, like we always do, we want to take a quick look at the economic calendar to see if we have any macroeconomic event that everyone will be looking forward to today. And in fact, what we normally do is to focus on high impact event that will be affecting the pairs or instruments that we have been monitoring, which is actually the US dollar, the pound sterling, and the Japanese yen. And from what we can see here on the economic calendar today, April 21, the only event we have is the S&P Global, that is CIPS Services, which is an indicator of the economic situation in the UK services sector. So this is one event everyone was looking forward to, and this happened about an hour ago. And from the data we have here, we have something positive for the GBPUSD, as we had a actual data coming in at 54.9 as against the consensus and previous data of 52.9. So we have a positive variance of 1.03, and we have been seeing some immediate reaction to this event on the chart, where we have been seeing the pound sterling drop significantly in the last 1 hour. So we are going to be looking at this and how we want to be anticipating the New York session based on the current market structure. So with that being said here, let's dive right into the business for today. So the first commodity we are going to be looking at, as usual, is the US oil. And on the US oil, we have been very, very profitable on this on this commodity since the beginning of the week, as we have been selling the US oil ever since the week started. And this is more evident after we connected the series of lower highs and lower lows, which has given us this beautiful descending channel on your screen right now, which further emphasizes the strength of the sellers throughout this week. And let's run through how the week actually started for us on the US oil. As you can see here, at the beginning of the week, we saw how price action was initially caught within this 40-cent channel between the $82.60 level and the $82.20 area to give us a little indecision in the market at that particular point in time. And in fact, you all know what we look out for. Whenever price action is caught within this kind of channel, we want to be patient and wait for price action to either break out or break down of the channel for a signal of where price action will be going for the week. And in fact, during our live session on Monday, we saw how price action broke down that $82.20 level, did a couple of retests of structure to further give us a confirmation into how strong the sellers are at that point. And prior to the New York session on that day, we had a sell stop order below the $82.20 level, which triggered our first sell position for the week. And we continue to ride the move all the way to the downside as we continue to add more positions, have the breakdown of key structures, which I've already deleted at this point because it's not what we want to be focusing on for today. So we had a couple of multiple entries on this one, and as at today, I can proudly say that we were able to scoop in over 500 pips on the US oil so far this week. So this is making the US oil one of the most profitable trade for us this week. And congratulations to everyone who has been part of this profitable journey. So now that we are heading into the New York session today, what is really going to be our plans? What are we looking forward to on the chart that will give us some confirmation or leverage on how to take advantage of any trading opportunity? Well, first of all, what I would like us to do here, especially for those who still have a sell positions running, as we had some couple of entries during the New York session yesterday. Remember, we had this $78 level where we said a breakdown of that structure will welcome some selling position, and at the same time we also have the $77.50 level also identified during our live session yesterday, where I said we are going to be looking out for more opportunities to add to our sell position. So for those who still have a sell positions running at this particular point in time, you all know what we do whenever price action moves significantly well in our favor. We want to be moving our stop loss accordingly to lock in some profits. Let's secure this current position, as we don't want to lose out on the profits we have made so far. So the most appropriate area, I think, at this particular point in time is to use the previous structure around or above the $77.50 level as an area where we want to be placing our stop loss at this particular point in time. So right now, what is going to be our plans today? Well, for me at this particular point in time, we are going to be taking this trend line, that is the support line of that descending channel on your screen right here, as one of our yardstick for trading activity for today. And what this simply means is that as long as price action remains below the trend line here, we shall still feel comfortable in our sell position, and at the same time look forward to more opportunities to sell the US oil. And if you look at what happened yesterday morning, we saw the breakdown of the structure, and since then price action has been trading below that level. So in addition to that trend line is the $77.50 level, where continued selling pressure below the structure will also give us confirmations that sellers are still very strong in this market. Then a further breakdown of the $77 level will give us more opportunity to add more position to our existing trade. So right now we had a situation here a couple of hours ago where price action broke down the $77 level, giving us a clue that sellers are still strong around that area. But one thing I would like us to note here is that this is not yet a confirmation that we are going bearish at this point. As you all know, whenever a breakdown of a structure like this, especially a level which has been a very strong resistance support line, that is have been support some bullish momentum in the past before we saw this breakdown happen. And if you look at the nature of the candle that followed the breakdown, you can see that we have an engulfing bullish candle at that point. So we still need some confirmations to happen for us to be able to be part of this move. So we have a breakdown, so we want to see some continued selling pressure on our lower time frame to give us that leverage that selling at this point is going to be a good idea. So at this point, let's have a sell stop order below the $77 level, as if we're going to have price action break the second time, it's more or less is going to be a confidence that sellers are still very strong at this point. So let's have a sell stop order below that structure and a stop loss right around that resistant line, which shares a confluence with the trend line that has been supporting this bearish momentum in the last 48 hours. So let's see how price action plays out. This like around 50 to 55 pips stop loss. So if you can afford that, let's have a sell stop order below the $77 area, then put our stop loss around that level, and let's see how far this move is going to go. Now, with that being said, here we are looking out for more selling opportunities in this market. We cannot ignore the potentials of buyers in this market. And if you look at what has been happening around that $77 area since the New York session yesterday, you will notice how that level has been consistent with buying pressure. We saw how we had multiple rejection from the buyers here, negating all attempt by the sellers to break down that structure. Though we had a breakdown of the structure here, but following that we had that engulfing bullish candle, which still gives us a sign that buyers are still strong. So if this whole bullish momentum around this area continues and gets stronger, then there is a high chance that price action could break out of both the $77.50 level and the bearish trend line, which happens to be the support line of that descending channel, to incite a potential move to the upside. And if this happens, then we want to be considering this whole setup that we have here a reversal pattern, but we still need some confirmation that will buttress the validity of this reversal pattern. So if a breakout of the $77.50 level, we are not having a buy stop above that structure. Remember, we are still within a very strong bearish move to the downside, and it is not reasonable to have a buy stop order within a very strong bearish momentum. It's just like you are jumping in front of a moving train. So we'll still need some confirmation that will buttress that buyers are gradually gaining some momentum. So what we want to be seeing on the chart that will give us some confidence to be part of a bullish momentum here is to see a retest of both the trend line and the $77.50 level happens. Remember, all this can be checked out on a much more lower time frame, like your 5, your 10 minutes, or your 15 minutes time frame. Look out for buy pressure above the structure, after which we could start thinking of buying the US oil. Then if a further breakout of the $78 level happens, buy pressure above that structure. Remember, this is a counter trend opportunity, and if a breakout of structure happens, we want to see confirmations in the form of a retest of the structure that was broken before we want to be thinking of adding more position to our existing trade. Then we could continue to ride the move all the way to the upside. Then if it so happens that this bullish momentum continues in such a way that it breaks out of the resistant line of that descending channel, which also shares a confluence with the $78.70 level, then at this point we have seen a mature reversal move, as the both trend lines now at this point does not have that capacity to hold the bearish momentum anymore. Then we could add more positions at that point, and we continue to look out for more opportunities to join the momentum to the upside. So this is how we are going to be buying the US oil today. So the only area we are looking forward to buying opportunity here is to see a breakout of the structure of retest. Then we could think of continuing to the upside. Then another thing I would like to state here is that if price action gets into the structures here, like the $78 level and the $78.70 area, these are areas that as soon as price gets into the structure, you want to be moving your stop loss accordingly to lock in some profit, as we want to see how price action will be reacting to this level to determine if we are going to continue to buy or get ready to sell. Remember, we are on a very strong bearish move, so these are key structures where selling momentum could build up to push price to the downside. So we should take note of these two structures along the way if it so happens that price action breaks out of the $77.50 level. So this is what we are going to be looking at today. So we have a sell stop order below the $77 area where we are looking to join a trend continuation if price action moves in that direction. So let's keep all these options open. For those who are still in the sell position, ensure you have moved your stop loss, lock in some profit, and let's see how price action will play out in the next couple of hours. So those are my views there on the US oil. If you have any questions whatsoever, feel free to drop your enquiries in the comment section. I can see Tom J. Good morning. How are you doing today? Amelero, how are you? It's been a while since I saw you. Trust you are doing well. 876, good morning. Trust you are doing well too as well. Okay, from the Canary Island in Spain. Oh, so glad to have you around. Are you new here? 876, let me know right in the comment section. So with that being said here, and in the absence of no questions, let's move on to the next option. So the next option on your screen right now is the US Tech. And on the US Tech, remember, where were we during the live session yesterday? Okay, we were around the structure here during the live session yesterday, where we were still looking out for more selling opportunities at this point actually. And remember, we had our long-term TP target zone for sellers around the 12,900, which is yet to be fulfilled since the beginning of this week. Now let's run through how the week started for us here on the US Tech. So we had a situation at the beginning of the week where we also had this flat channel figured out between the 13,120 and the $13,075 level. And you know what we look out for whenever we have this kind of simple setup. we want to see price action break out or break down that channel. And with a buy stop order above the structure and a sell stop order in anticipation of a possible breakout of the structure, we had the breakdown of the structure happen. And at this point, we had our first sell position for the week, where price action moved over 90 pips in our favor before the bullish momentum began. So we also saw some buying opportunity as well. Remember, we had a buy stop order above the 13,120, which is still within that channel that we identified at the beginning of the week. So we had a breakout of structure there. Price action moved about 80 pips in our favor before selling pressure resumes, taking us out of that position. Definitely, we had moved our stop loss, locked in some profit, and we actually closed in with some small profits at that point. Then we also saw another breakdown of this $13,075 level again for the second time, which triggered another sell position. We were taken out of that position later on that day, and we had some small profit too as well. Then yesterday, later in the New York session on Wednesday, we also saw some selling positions here, which we took advantage of yesterday. So you can see how that channel that was figured out at the beginning of the week has been serving as a major zone where major decision is being made in this market. So it was within this channel we saw the first sell position at the beginning of the week. The same area we saw the first buy position at the week, sorry. Then within this channel as well, we saw the sell position we had on Wednesday, and within this channel as well, we saw the sell position we had on Thursday too as well. And yesterday during the New York session as well, we also had sell positions coming in from that same area. So you can see how important this zone that started this week has been in determining how price action is going to be moving this week. And from the look of things right here, you would agree with me that things are looking very, very bearish in this market. The only time we bought from that channel was on Tuesday here, when price action broke out of the 13,120, and since then we have been seeing certain opportunities below that support line at the $13,075 level, for the emphasizing that how strong the sellers are in this market. Now it's been bearish. We have seen our price action has been finding lower highs in this market. So what I want to do now is to readjust my trend line so that we can encompass the lower highs in this market since the beginning of the week. Let's run it, connect a series of lower highs, and here we have this beautiful bearish trend line. Now with the situation here, it makes much sense to continue to look out for more selling opportunities in this market. And before we go into the details, for those who still have a sell position running in this market, please, it's important that you move your stop loss right now, lock in some profit, and I assume an area around the 13,000, above the $13,000 level seems most appropriate to secure any sell position at this particular point in time, as we hope that price action will, at probably before the end of the week, hit our TP target zone within that $29,000 area. So let's see how price action plays out going forward. But before we close on the US tech this morning, I would also like to call our attention to the nature of price action as soon as it gets into that area around the $13,000 level. And what you would have noticed here when price action gets into the $13,000 level is that we have been seeing some buy pressure. In fact, since the beginning of the week, we have been seeing some buy pressure resume around that area. It also happened here a couple of days ago before we saw the significant breakdown of this structure. And despite the significant breakdown of this level, we still saw some bullish momentum that climbed back to the upside. We saw some consolidation phase around that area. So it's more or less a sign that sellers were struggling around that area, and there are still traces of buyers at this particular point in time. And to make things a little bit clearer, if we bring out our line chart at this point, I think we should be having a higher low here. When we connect it, I think we'll still need to do some readjustment when we bring back our candle chart. So we have something like this right here. So let's have this. I'll give this a green color. Okay. Then also we need a support line around this area, which I think will be more clearer if we use the 12,950 level. Seems most appropriate to lock in a support line here. Okay, so we have the 12,950. If we look at what has been happening here in the last 24 hours, so let's label this area 12,950 level, which will definitely be another yardstick for trading activity for today. So we have that figured out there. So one thing we are going to be doing, look at what has been happening since yesterday's trading session. We saw buy pressure. So we have a new support line where we have been seeing some sharp rejection of that level. We also have higher lows, emphasizing buyers are trying to gain some momentum from this current structure. Now, what happens here for us is a breakdown of the 12,950 has a high chance of inciting more selling opportunity in this market. So for those who are still yet to take advantage of a sell position, let's look out for more opportunities around this area. So we could see a breakdown of structure, then you scale down to your lower time frame. We wait for either a retest of the 12,950 or this trend line here, where we look out for selling pressure to join the trend continuation to the downside. And like I said yesterday, if you recall vividly what I said about our TP target zone, that it depends on how price action reacts to the zone that will determine if we are going to be adding more sell position or we are going to be getting ready to buy. So once price gets into this TP target zone, we want to look out for how price reacts to that structure. So if we start seeing buy pressure along this area, then we will probably get ready for a counter trend move that might likely break out of that trend line. But if price action breaks down the TP target zone and selling pressure resumes right below the structure on our lower time frame, we would have no choice than to start thinking of selling the US tech at that point. So let's see how price action plays out with this current structure that we've just identified here. Now, in as much as we're looking out for selling opportunities in this market, you know what I always do here is that we want to take into consideration the potentials of the buyers too as well. And we want to see what to look out for on this chart that will give us a signal that sellers no longer have a say in this market. And for us to buy at this particular point in time, remember we have been seeing some higher lows here in the last 24 hours. So anything could actually happen. Buyers could gain a momentum here. And for us to buy at this point, I will suggest that we wait for a breakout of the $13,000 mark, which happens to be a very important key structure since the beginning of this week. Then we look out for buy pressure when we scale down to our lower time frame, and at this point we would have seen a situation where price is giving us signal that a breakout of that trend line will be happening. And if a breakout of the trend line happens, then this will have been a sign that the trend line no longer have that strength to resist the bullish pressure anymore. And at that point, we could start thinking of buying the US tech at this point. So it's a very simple setup we have here, where the $13,000 mark and the bearish trend line is going to be serving as our yardstick for trading activity today. So you can screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the US tech. So those are my views there on the US tech. So let's be on standby to catch these moves as we continue to monitor price action. So in that being said here, let's move right into the next pair for today, which is the GBPUSD. On the GBPUSD, we have a sell position running currently as we had price action break down that trend line for the first time this week. Now let's quickly run through how the week has started for us on the GBPUSD and what led to this point where we were selling the GBPUSD as of today. Now at the beginning of the week, this is what we saw. Remember, at the beginning of the week we had this very important key level, which was at the 1.2400 level, where we said we agreed that we are going to be using this line as our key level for the week, which will be guiding trading activity. That simply means that if price action remains above that structure, we look out for buying opportunity, and if price action breaks down that level, we look out for selling opportunity. And at the beginning of the week, we saw this consolidation phase happen within that channel between the 1.24200 level and the 1.23840, which is just right within that key level, and you can see which further emphasizes how important that price is at that current point in time. And this continued for about 12-18 hours before we saw the sell pressure that broke down the structure, and we were part of this 50 pips move thereabout before the bullish momentum you see here started on Tuesday. And one thing we said during the live session on Tuesday is that this whole bullish momentum we see here could actually be a retracement of that impulsive move to the downside that started on Friday from that 1.2550 level here. So we anticipated that this could turn out to be a retracement. Probably price will get into our golden zone area, which was the area between the 50 and the 78.6% of our retracement tool. So let me do that quickly for the sake of clarity here. So when we run the Fibonacci retracement tool through the previous impulse leg here, we focused our attention at the area between the 78.6% and the 50% of that impulse leg, where we identified a potential sell window. And we also said for those who will be buying above the 1.2420 level that our TP target should be within this area, as the appearance of any selling pressure below the structure will give us an insight into a potential reversal pattern that will lead into price action moving in the prior leading price action. So since we already have this impulse leg started on Friday, we saw the situation here, and thank goodness we begin to see some selling pressure around the 1.24700 level. As we saw for the last 2 days price action, buyers found it very difficult to break out of this level, which gave us a clue into the strong presence of the sellers at that point. So we anticipated a potential trend continuation to the downside here, and what we did to help us to be able to catch that move at the right time was to consider this bullish trend line here as our yardstick for trading activity. And since we had a trend line here, we said the trend line will continue to guide the bullish momentum, but if at any point in time price action breaks down the trend line, then we will have no choice than to get ready to sell the GBPUSD. And with a sell stop order below the 1.24200 level, which happens to share a confluence with that trend line, we had our second sell position for the week triggered at this point during the early hours of today. And since then, price action has continued to drop to the downside. And in fact, if you recall vividly, we already identified key structures like the 1.24200 level, the 1.2400 area, which was our key level at the beginning of the week, and the 1.23840 level, which happens to be the support line at the beginning of the week for more opportunities to add more position to our existing trade. And for those who had been part of this move right after the breakdown of the trend line, well done to you guys, as you will currently be running with about 58 pips in profit on that first position. And if you are taking advantage of the second one, you have about 35 pips on that one, and the third one here you would have about 20 pips in that regard. And right now, you all know what we want to be doing after price action has moved significantly well in our favor. We want to be moving our stop loss accordingly to lock in some profit. And at this point, I will suggest that anywhere right above the 1.240, I think somewhere around the 1.24100 level seems most appropriate to lock in some profit here, as I still think we need some room for price action to breathe, because there is still a chance that we could have some retracement or choppy situations before another breakdown of structure will happen at this point. So let's give room for price action to breathe. Move your stop loss in such a way that there is still enough space for price action to do the old chopper situation or retracement phase or pullback before the trend continuation to the downside happens. Now that we have all this secured at this point, what is our next line of action? How are we planning to take advantage of a trading activity today? Is it still going to be bearish, or are we going to be looking out for buying opportunity? Well, this will all be sorted out in a moment. So before I go into the higher time frame, where we want to have an holistic view of what is really going on in this market, and is the structure on the higher time frame supporting a bearish move. Before we go into that, I want to acknowledge here the 1.23840 level. Remember, this level was our support line at the beginning of the week when we saw this old flat channel happen around this area, and right now price action is back at that level, and we're beginning to witness some choppy situation going on around that area. So this further emphasizes that we are within a very critical point in this market where anything could actually happen, and anything that happens here will be very decisive and will now dictate how price action will go on for the later part of this week. So in that regard, we are going to be focusing on the structure for today. But before we go into the details of what to look out for, let's run through the higher time frame to have an holistic view of what is really going on in this market. So when we scale up into the daily time frame, this is what we were able to see here at the beginning of the week. Remember, we sorted this out at the beginning of the week, where we saw how price action appeared to be on a bullish momentum since October last year. And to further emphasize the strength of the buyers, we had to connect a series of higher lows here, which gave us that resultant bullish trend line. However, something interesting happened in this market in the month of December, as we saw that as soon as price got into the 1.24500 level, we begin to see the resumption of selling pressure around that area. And that was not the first time that would happen. We also had it happen here in the month of January too, as we saw that buyers begin to lose that drive that brought them to that point. Then the same thing also happened at the beginning of this month, though we had the breakout of that structure happen here, which happened to be the first time price action would ever break out of that structure in the last 5 months. Though we had a breakout of that, let me zoom in so that we can see things more clearly here. So though we had a breakout of that structure, but you can see that the bullish traction was not strong enough to continue that momentum. Even a couple of weeks ago, we also saw that same old thing happen here. Price was unable to maintain that momentum to push price further to the upside. Hence, we had a resistant line here at the 1.2550, negating all attempt by the sellers by the buyers to continue to the upside. Now, I told us all here at the beginning of the week that with this whole situation here, with this engulfing candle that sliced through the 1.24500 level, it has brought price action back into the territory of the sellers. Remember, below the 1.2450 level has always been a strong selling niche for participants in this market, at least since December last year. And I told us at the beginning of the week that if price action comes back into the 1.24500 level and we continue to see selling pressure where buyers are finding it difficult to climb above that level, then it might be another opportunity to be part of a sell move. And thank goodness we were part of the sell momentum. We were able to identify that structure on our lower time frame so that we can take advantage of that bearish move. And as you can see here, we already have a sell position running, and this is the candle for today, which is looking very strongly bearish at this point. And remember, we have moved our stop loss accordingly to lock in some profit here while we continue to monitor price action. So at this point in time, we are within the seller's territory right now, and it is reasonable to start looking out for more selling opportunities. But there is a caveat to this whole structure here, and that is that area here had the 1.23700 level. And why is that area very important? Well, if I replicate this and bring this into the structure, you will see what I'm talking about, and things will become a little bit clearer. So look at what we have here. Let me first of all label that area. So we have it at a 1.23700, right? Am I correct? Let me see that again and see. Let me see. Okay, I think we are correct. So 1.23700 level. Now look at what has been happening around the structure in the last 6 weeks thereabout, I guess. See what has been happening here. Look at this level. Was a very strong selling niche at one point, and before we saw the breakout of the structure happen at the beginning of this month. And since the breakout happened, what did we see here? We have been seeing buy pressure around the 1.23700 level in the last couple of weeks, which further emphasizes the strength of the buyers around that area. Now, with the continued selling pressure here, as you can see, buyers appear to be losing that momentum, and we still need some more confirmation to give us a clue that sellers are taking over this market, and that is likely going to be coming in the form of the breakdown retest of the 1.237 for a sell-off in this market. So this is what we shall be looking at that will confirm the current sell position we are in right now to push price further to the downside. And if you look at this whole structure here between the 1.2550 level and the 1.23700 area, you will see that there is a consolidation phase around that area, and this whole situation here could turn out to either be a trend continuation pattern or a reversal pattern. And you all know what we look out for whenever we have this kind of simple flat channel like this. We want to remain patient, waiting for price action to either break out of the resistant line to give us a trend continuation pattern to join a bullish momentum to the upside, or a breakdown of the support line here to give us a reversal pattern that will incite a sell-off in this market. So right now, the 1.23700 level is going to be serving as our key level for the coming week, as it depends on how price action reacts to the structure that will determine if we are going to be adding more sell position to this market, or we might be thinking of buying at this point. So let's see how price action is playing out around this area on our lower time frame. Then we anticipate how to take advantage of this move for today. Now, with the information we have gathered here on the daily time frame, we shall be scaling back down into the 1 hour time frame, where we want to decide what our next line of action will be. Now, with the situation we have here, hold on a second, I think we should look at something on the 4 hours time frame. First of all, I would like to make this disappear on the higher time frame so that we can have a clean chart on the higher time frame. And which one else? Okay, so we still need this 1.235. Excuse me. So let's go into the 4 hours time frame right now, and here we are on the 4 hours time frame. Now, this was the structure we identified at the beginning of the week. As you can see, it has been very, very bullish in this market for the last 1 month. And we have a bullish trend line to emphasize that before we now saw that situation here where price action was trapped within that channel. And with a trend line that has been supporting that bullish momentum for the last 1 week, broken at the beginning of this week. As we saw the breakdown of that trend line here, we saw our buyers try to climb back above the trend line, but this was not possible as sellers continued to negate all bullish attempts here, which further break down that trend line that has been supporting that bullish momentum since the beginning of this week. As you can see, price has been dropping to the downside. So we are at a critical point right now at the 1.23840, as there are 2 possible scenarios that could happen here. Buy pressure could resume again at this point to do a retracement back into any of these structures at the 1.240, 1.242 or the 1.24420 before another wave of bearish momentum will happen. So we need to be very careful here. Lock in your existing position by moving your stop loss accordingly, and let's see how price action will be reacting to the 1.23840 level, and this will decide if we are going to be adding more sell position. So what I want to do now is to scale down to a much more lower time frame, like the 15 minutes time frame. We want to see how price action is reacting to this structure. Are we going to be seeing a trend continuation pattern there, or a reversal pattern to give us a clue of what to do next? So scaling down into the 15 minutes time frame, this is what we are going to be looking at this point. So this is the 15 minutes time frame. I will bring this in a little bit so that we can right, and then there's the key level for the week. We have it here, the 1.242. Okay, so these are structures. So right now we're on the 15 minutes time frame, and as you can see here, we have been witnessing some choppy situation around this area, making this area a very critical point in this market right now. So we have this area as a temporary demand zone. Let me call it a temporary demand zone because of the buy pressure we have been witnessing around this area in the last 3 to 4 hours now. So I will label this area a temporary demand zone, and let's place this right inside that box. I'll give this a white color, and then I'll give this a darker color here, and let me see if I can make it a little bit darker. Beautiful. So we have a temporary demand zone here, which has been consistent in the last 3 to 4 hours, as you can see here. So at this point in time, anything could happen. The buy pressure here, remember we have a strong memory for buying power here in the past. At least at the beginning of the week we saw that situation. So we could still have a retracement into structure, the 1.24 before the bearish move, or the 1.242 before the bearish move, or the 1.24420 level before the bearish move to the downside. So that is one scenario. So if you are a counter trend trader, you might want to take advantage of a higher low, higher high situation here, where we are going to be looking at the 1.240 area, 1.242 area, or the 1.244 area as a TP target, where we shall be looking out for selling opportunities to join that trend continuation to the downside. But if that does not happen, and instead we have a situation where that demand zone here is broken to the downside, selling pressure below the structure, then we are in to add more sell position to our existing trade. So you can see how this whole structure here at the 1.23840 level is so significant for us during the New York session today. So this is where our center of focus is going to be for today. So screenshot my screen, use it as a reference point, as we are going to be looking out for more opportunities here. Now, for those, if this demand zone here turns out to hold and we start seeing higher lows and higher highs, this is for counter trend traders and scalper. So if you're a scalper, you're a counter trend trader, you can take advantage of this move, and you know how you want to manage this trade. You want to ensure you're on the screen to manage this trade accordingly, as you will need to be moving your stop loss accordingly to lock in some profit as price action moves in your favor. But if you are not a scalper and you don't feel comfortable taking counter trend opportunity and price action climbs up, remember you want to stay at this bus stops here to look out for how price action reacts to that structure to give us an opportunity to join the trend continuation to the downside. So we have the 1.24, the 1.242, and the 1.24420 to look out for the selling opportunity. And if it so happens that the breakdown of the structure happens, then we are in to join a sell move to the downside. So that is how we are going to be trading the GBPUSD today. And remember, we also have a structure at the 1.23500 level, which has a memory for buying power in the past. A breakdown of that structure too as well will be welcoming more selling opportunity in this market. So let's be on standby to catch that move. Screenshot my screen, use it as a reference point whenever you're about to make your decision. Then one thing about this whole situation, those who have a sell position running right now, move your stop loss, lock in some profit. We don't want to lose out on whatever we had made so far. So that is that on the GBPUSD. If you have any questions, let me know right in the comment section. Then we are moving on into the XAUUSD, which is another pair that has been profitable for us so far this week. So we have been selling the XAUUSD since the beginning of this week, as you can see here, as we had a couple of sell positions. Okay, the first one was at the breakdown of the $2007 level here. We had some buying opportunity when price action broke out of the $2000 mark. We had another sell position here on Wednesday where we had a whooping 300 pips move on Wednesday on that one. Then we also had some buy position here at during the New York session yesterday before we were taking out the worst case scenario of break even. And the reason why we have been doing all the buying and selling here was because of that key level, if you remember, at the beginning of the week was identified at the $2000 mark, which is a very, very strong psychological area considering the round figure of that price. And this level has been of immense help for us in this community in deciding how to take a position on the XAUUSD, as we already agreed at the beginning of the week that price action trading above the $2000 mark will be welcoming a buying opportunity, and if price action breaks down the $2000 mark, we want to be looking out for selling opportunity. And this has been of immense help for us in this community this week. So well done to everyone who has been on a profitable trade so far this week. And we also had one this morning here after we had price action break down the structure. So with our sell stop order below the $2000 mark, we had our sell position triggered there. And if you are taking advantage of that opportunity, you will currently be running with about 120 pips on that position right there. And remember, we also had another position here at the 1992 where we were looking out for more selling opportunities. Now for today, we also have structures at the 1987 and the $1976.50 level, where we shall be looking out for more selling opportunities on the XAUUSD. And one more thing I would like to let us consider while we monitor price action at this bearish trend line, which has further emphasized the strength of the sellers in this market. As you can see, since the beginning of the week, both of those trend lines has been supporting our bearish move to the downside. So we can see consistently we have been seeing lower lows and lower highs in this market. Though we had a breakout of this structure here yesterday, and as you can see, it didn't last long, has our $2007 level, which was our resistant line for this week, has consistently been that area where sellers have gathered to take over the market from the buyers. And you saw what happened, led to the breakdown of that $2000 mark again, breakdown of this trend line, and right now we are within the territories of the sellers. So as long as price remain below the bearish trend line at this point, we want to be looking out for more selling opportunities in this market. So let's see how price action plays out from this point. Now, like we always do here, we always want to try to be as flexible as possible. So in as much as we're looking out for selling opportunities, we also want to consider the potentials of the buyers too as well. Now, with the whole situation we have here, though I'm not thinking that buyers will actually come in at this point, but if it does happen that buyers come in, we want to be part of that move. We don't want to miss out on that opportunity. So what do we want to see on this chart that will make us think that buyers are gradually gaining some momentum in this market? So for us to buy the XAUUSD at this point, I would rather see price action take out that bearish trend line. So this trend line is still our yardstick for trading activity today. So a breakout of that trend line will definitely give us a signal of a momentum shift. But we are not getting too excited as we still need some confirmations. And another thing I would like to state here is that before the breakout of that trend line happens, we also want to take note of the lowest point price action has ever been this week. So this is the lowest point here. And look at what has been happening around the 1,987 level in the last couple of hours. As you can see, we have been noticing some buy pressure around that area, which is giving us a clue into a possible bullish momentum actually, but I'm not sure that is going to be the case here. So we have a higher low right now, which is, if it continues and leads to the breakout of that trend line, then we have a higher low, which is a sign that buyers are gradually gaining some momentum, and then a retest of the 1,992 where buyers continue to insist their momentum here. Sellers find it difficult to break below the 1,992, then we can be looking out for buying opportunity where a breakout of the $2,000 mark will welcome more buy position in this market. And if a breakout happened at that point, price action would have climbed above this bullish trend line that we have here to confirm the strength of the buyers in this market. But I doubt if this is going to be happening. But if it does happen, we want to be part of that move too as well. So let's keep all this in mind as we continue to monitor price action and secure the current sell position in this market by moving our stop loss to lock in some profit. So that is my view here on the XAUUSD for today. If you have questions, let me know right in the comment section. So we shall be heading into the last pair for today, which is the USDJPY. And on the USDJPY, we have been buying actually prior to yesterday's live session. And to further emphasize the strength of the buyers in this market, remember we have this bullish trend line which has been of major help in helping us to guide our bullish momentum in this market. So we bought at the beginning of the week at above the 134.200. We also bought at the 134.200 here as well. We rode the move all the way to the upside. And during our live session yesterday, we observed how that area had the 134.450 level has been a very strong demand zone in this market. So we acknowledged it. And one interesting thing about this whole structure is that it shares a beautiful confluence with that bullish trend line. And we said we'll continue to look out for more buying opportunity only if we have a breakout of the 133.750 retest of structure, then we can join that bullish momentum to the upside and add more position at the breakout of the 135.100. But unfortunately for the buyers, this never happened yesterday, and we also considered the potentials of sellers at this point, where we said if price action breaks down the 134.370 level, which is the temporary demand zone, it would have broken out of that bullish trend line, which has been supporting this bullish momentum since the beginning of the week. And at this point, we might likely be seeing a bearish move. And with a sell stop order below the 134.370 level, we had our first sell position for the week triggered. And for those who had missed out on that opportunity, the market was so kind enough to give us another opportunity as we saw a retest of structure happen like 4 to 5 hours after that breakdown of structure. And I hope you are part of this move, and if you truly did, you will be currently running with about 60 pips in profit, which is not bad at all. And then we also had another sell position at the breakdown of the 134.200 level, triggering another sell position, which is currently running with about 40 pips. And in total, we have roughly 100 pips currently running on the USDJPY. And for those who are part of this profitable journey, well done to you guys for being on standby to catch this move, as right now we want to be locking in some profit, and I'm suggesting anywhere above the 134.00 level seems most appropriate to lock in some profit. Now, for those who had missed out on these opportunities, and how do we intend to be part of any trading opportunity today? Well, I can tell you categorically we are at a critical point in this market. So we are not having any sell stop order below the 133.710 level at this point, as we need to see how price action will be reacting to the structure to determine if we are going to be going bearish or not. Now, look at how important the structure is. Remember the 133.800, which is a very strong key level we identified on the daily time frame, which happens to be the neckline of the potential reversal pattern we identified on the daily time frame. We are going to be looking at that in a moment, but before we go into the daily time frame, I want to show you here on the 1 hour time frame how this level has been a major factor since the beginning of this week. Now look at how price action started at around the 133.710 on Monday. You saw how price action was finding it difficult to break down that structure, which led to a situation where we had that flat channel here that gave us a clue that a bullish momentum is very likely this week. So we can see how buyers gathered here to negate all attempt by the sellers to break down that structure. And since the beginning of that week, you can see that buyers are still holding on to that area to negate all attempts. And when we look at what has been happening here in the last 10 to 12 hours now, you will see how buyers have consistently rejected all attempt by the sellers to break down that structure. Now, talking about how important that key level is here, let's scale up into the daily time frame, where we identified at the beginning of the week a very interesting structure that we said we were going to use to guide our trading activity for the week. And I will just focus on what has been happening in the last couple of months, and that is the breakout of the bearish trend line on this chart here. And you know, from a technical standpoint, whenever we have a breakout of structure, we expect that one point in time price is likely going to come back, do a retest of structure, and it was exactly that it did here during the course of last month. Retested the trend line and transitioned into what looks like a reversal pattern here. And you all know what we do whenever we start identifying a potential reversal pattern. The next thing we want to be doing is to identify the neckline of that reversal pattern, which definitely will be a platform upon which a bullish momentum will happen. And if a breakout of the neckline happens, it will confirm the validity of that reversal pattern. So we had the neckline of that reversal pattern identified at the 133.800 level, and this was where the idea of our key level for the week came in. And since the beginning of the week, we have been buying the USDJPY, where we saw our price action broke out of that neckline, had the 133.800, in fact moved about 130 pips in our favor before we started seeing the sell pressure resume at this point. And right now, price is back at that neckline area again at the 133.800 level, and this is why I said we are at a critical point in the market. Will this turn out to be a breakout retest situation that will incite the trend continuation to the upside, or are we going to be having a breakdown of the 133.800 level where selling pressure below the structure will now negate that reversal pattern to incite a sell-off in this market? So you can see how important the 133.800 level is. Now, with this whole situation we have here, I was able to identify a very simple setup on the 50 minutes time frame, which we are going to be using today to guide our trading activity for today. Now we shall be scaling down into the 50 minutes time frame, and this was where I was able to identify a simple setup that we shall be using to guide our trading activity today. So this is what I was able to identify on the 15 minutes time frame, and we shall be using this to guide our move for today. So now we have the 133.800 level, which I've duly identified here, and we all know how important that structure is on the daily time frame, and it's also serving as our key level for trading activity for this week. And we also now have a temporary demand zone, which you can see here. Since the beginning of today, we have been seeing our price action has been finding buy pressure around that area, negating all attempt by the sellers to continue to push price to the downside. Now, in the last 24 hours, we saw price do something like a lower lows, lower highs, giving us a bearish trend line as well. So for me to buy this whole situation here, I want to see price action break out the neckline of this potential reversal pattern that is gradually unfolding at this particular point. Hence, I'm having a buy stop order above the 134.050 level to be part of the bullish momentum to the upside. So this is what I'm going to be looking out for to buy the USDJPY today. However, with this whole structure we have here, there is still a potential that we could still join a bullish momentum if this whole buying pressure here becomes so strong. We could still join the bullish momentum even before the breakout of the structure happens. But if we are going to be joining before the breakout of the structure happens, I would want to see price action break out of the trend line at one point, probably break out of this trend line, and if it breaks out of the trend line, this will be the first time price will break out of the trend line in the last 24 hours, giving us a sign that the trend line may no longer have the capacity to continue to hold that bullish momentum, the bearish momentum. And we are not jumping into conclusion yet, as we would look for a retest of structure, something like this, buying pressure above that level. Then we can actually join that momentum even before the breakout of the 134.050 level happens. And remember, we already have a buy stop order above that structure. Then it will just trigger that position at that point, and then we'll have two positions running, hereby maximizing our profit potential on the USDJPY for today. So this is how I'm going to be buying the USDJPY for today. So let's look out for this opportunity to be part of this move. Now, to make things a little bit easy for us within the breakout retest of the structure, let's identify a structure around that area so that we can as well use it to guide that momentum as soon as the breakout of the trend line happens. So we have something here had the 133.900, another psychological level there. So we shall be using that too as well to guide this trading activity today. So let's give this a dark color, and here we go. So a breakout of the trend line would have also broken above the 133.900, and a retest of that structure will give us more opportunity to be part of that move even before the breakout of the 134.050 level happens. So that is that on buying the USDJPY. Now, like I used to say here, we cannot decide wholly on one direction without taking into consideration the potentials of the opposite direction. Now, at this particular point in time, though we have a reversal pattern and buyers looking more promising to incite a reversal pattern around this area, we can never tell, since in the last 24 hours we have been having some bearish momentum here. A bearish trend line is on the chart to confirm the seller's pressure in the last 24 hours. So at this point in time, what will we see in this chart that will confirm that sellers are probably taking the day at least till the end of today's trading session? Well, at this structure, going back to our line chart, there is a platform where buyers have lived to, which is around the 133.690, which I will label here. So 133.690 has been the latest support line for buyers here, where we have seen, can you see, we have been seeing some buy pressure here. So at this point in time, this is what I want to see in this market that will give me that leverage to sell. So I want to see a breakdown of the 133.690, and if a breakdown of the structure happens, then we would have seen a situation where price action has taken out all the buyers at this juncture in this market to give us a bearish signal. Now, a retest of structure is what we look out for to be part of this trend continuation to the downside. So you could have your sell stop order below the 133.690, or wait for a retest to happen, then you join that decline to the downside. So if you have a sell stop right here, just give room for price action to breathe. You could have your stop loss somewhere around the 133.90 level, which dovetails to about 20 pips stop loss there, so that you can give room for any potential retest or structure happening before that continuation to the downside. So these are what we are going to be looking at on the USDJPY today. So on this note, I want to be calling it a day here. It has been a wonderful moment, and I hope that we were able to simulate all the possible potential trading opportunity that might likely come up during the New York session today. So let's be on standby to catch any of this opportunity. Ensure you have moved your stop loss on all existing and running position as we wait out for more opportunities to come in to join that move to whatever direction it is going. So it has been a wonderful moment. And for those who are joining us for the first time, I hope you are able to catch one or two things from what we discussed today. But if you are not yet, it's okay. With time, you get to understand how this works. Join us again next time, Monday, as we take a fresh new look at the market to prepare ourselves for the new week. Do have a wonderful evening, everyone. And I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review and look at the financial market with a fresh new highs as we prepare for the new week. Once again, do have a wonderful evening and a merry, happy weekend to you all. Bye-bye.